Commodities in focus. Well, all of this also feeds into inflation, right? I mean, inflation pretty much is the focus, not just in the US later, but here in India as well. It was a bit of a shocker. The numbers came out for January in India after market hours, and this is not good. It's well above the RBI's stated target band of between 2 and 6%. The number came in around 6.5%. Lata is here for more details on what to make of it. Lata, would you?
Above 6% was not the worry. Our CNBC TV 18 poll itself was 6.1%. And for the last 30 months, I think 26 months, it has remained above 6%. It's just the difference between the expectation and the number. 6.52 versus expectations of 6.1. I have not seen such a breach, such a shock coming for the market. And the sole reason is food. That's the unfortunate part. Food inflation was 4.19 in December. It is 5.94. I mean, look at the month-on-month jump. And what is worse, led by one item, cereals. Cereals have risen by 2.6% month-on-month. That is just Jan over December. And now if you look at the annual rise, January over January, it is 16.2%. Cereals is a huge weight in the CPI. I mean, for most of India's, population, cereals will be the biggest contribution in their purchase basket. So 12% weight, and that's why it's gone through the roof. Now, there is some controversy. There are some economists who say if you look at the rice, wheat, corn, the internals, it's not adding up to 2.6. But, sources in the Reserve Bank and in the NSO tell me we are staying by this number. These internals differences happen. Now, one explanation is, that free food, 10 kilos, was stopped in December, if you remember, and it was halved. So now only the National Food Security Act free food is available. Probably because that was less, people went out and bought more, and the market food prices went up. Could be a possible explanation. But in my 25 years of reporting on inflation, I have not seen such a month-on-month jump. And that perhaps also explains why the Reserve Bank sounded cautious. All of us were expecting that they will indicate that they are peaking off on rate hike, the cycle is ending. They resolutely refused. They probably knew something, but if they knew something, why did they lower the Jan, Feb, March, inflation forecast to 5.6 from the earlier 5.9. So this is a shocker, even by Reserve Bank standards. So now for the market, for you and me, or for investors, the point is bond yields are definitely rising, maybe even going above 7.4. And that will mean, of course, bad news for banks. Mildly so, NBFCs definitely, realty companies bad.
I guess now it's a given that on the 6th April policy, there will be a 25 basis points
that's what the market will, it was always expected, now it is a given, it's a definite.
But just to chime in, the 6.5% feels real, right? I mean, inflation for us is not, it's 6.5%. I would say it feels even higher. For years now. So of course, this is what matters in terms of the policy rate, etc. So point taken, absolutely.
I guess he's trying to say that it's pinching everyone's pockets, right? You can see it on the ground.
You absolutely can see it. Only vegetables fell in December. Nothing else fell. So people were preparing, economists were prepared for a higher number. That's why we had the average of 6.1. But even then, this 2.6% cereal inflation is just taking your breath away.
Okay, thanks a lot, Lata, for that. Well, on